Hey there, financial adventurers, and welcome back to the channel where we decode the fascinating world of hard-to-borrow stocks and potential short squeezes. Today, we're diving deep into a name that recently popped up on our screener with some truly eye-watering numbers: CLRO Inc., ticker symbol CLRO. This isn't just any stock. CLRO presents a unique profile that demands our attention, especially when considering the mechanics of a short squeeze. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show CLRO chart. Let's zoom in on CLRO, CLRO Inc. This company operates in the technology and communication equipment sector. While CLRO was historically known for designing and marketing professional audio conferencing, microphone, and video collaboration solutions, it currently does not have significant operations. Incorporated in 1983 and headquartered in Salt Lake City, Utah, CLRO carries a relatively small market cap of just $23.08 million. Now let's talk about recent price action, because it's been a wild ride. Highlight price action numbers today. CLRO is down 12.64%. But don't let that single day fool you. Over the last 5 days, CLRO has surged an incredible 120.47%, and looking at the past 30 days, the stock is up a staggering 165.22%. What's driving this volatility? Today's volume sits at 1,764,456 shares, which is actually quite low compared to its 30-day average volume of 9,335,621 shares. That's a relative volume of just 0.2 times the average. This low relative volume on a down day after a huge run suggests a lot of eyes are on this one. What is cost to borrow and why it matters? So, why did CLRO land on our hard to borrow screener? The answer lies in something called the cost to borrow, or CTB. In simple terms, when you short a stock, you borrow shares you don't own and sell them, hoping to buy them back later at a low price. The CTB is the annualized fee that short sellers pay to borrow those shares. It's like interest on a loan, but for stocks. And why does it matter? Because high CTB fees directly eat into a short seller's potential profits and significantly increase their risk. If a stock costs 700% to borrow, you're paying nearly 2% of the stock's value per day just to maintain your short position. This rapidly escalating cost can become a huge burden, even for conviction shorts. Why this stock is hard to borrow right now. Highlight CTB fee on screen. This brings us back to CLRO Inc. CLRO. Our data shows an annualized cost to borrow fee for CLRO sitting at an astonishing 708.5%. To put that in perspective, anything above 100% is considered extremely high, signaling intense demand to short the stock while supply of borrowable shares is scarce. While we don't have CTB momentum or the exact shares currently available to borrow for CLRO at this very moment, this 708.5% fee combined with an estimated float of only 0.7 million shares tells us something critical. A small float means fewer shares are available for trading and borrowing, making the stock highly susceptible to price swings and increased borrowing costs when demand to short is high. Our internal composite squeeze score, which factors in multiple metrics, gives CLRO a score of 45.4 out of 100. This indicates a moderate but notable setup, primarily driven by that extreme CTB. Squeeze mechanics explained. So, what does it mean for a stock like CLRO to be hard to borrow with such a high CTB? It means the market believes there's a significant downside, but the actual shares available to bet against are very limited. This scarcity can pave the way for a short squeeze. Imagine this: the stock price starts to climb, perhaps from positive sentiment, increased buying pressure, or simply short covering. As CLRO's price rises, short sellers who are paying the 708.5% daily fee start to feel the heat. Their losses mount, and the cost of holding their position becomes unbearable. To mitigate losses, they are forced to cover their shorts, which means buying back shares in the open market. This buying demand further pushes the price up, triggering more short sellers to cover, creating a rapid, upward spiraling effect. That's the short squeeze in action. However, it's crucial to understand that a high CTB does not guarantee a squeeze. It can also indicate that short sellers have extremely strong conviction in their bearish thesis and are willing to pay a premium to stay short. Dilution risk check. One critical factor that can make or break a short squeeze thesis is dilution risk. Dilution occurs when a company issues new shares, increasing the total share count. This can flood the market with new supply, essentially providing more shares that short sellers can borrow or buy, thereby offsetting any buying pressure from short covering. For CLRO, our check found no recent dilutive SEC filings such as -1, -3, or 424B in the last 90 days. This is a positive sign, as the absence of recent dilution means the company hasn't added new supply that could temper potential squeeze. We also found no recent reverse splits for CLRO in our look-back window, which can also sometimes be a precursor to other share structure changes. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For CLRO specifically, keep a close eye on a few key indicators. Share live data if possible first. Watch the volume. Today's volume is significantly lower than average. A true short squeeze often ignites with a sharp increase in trading volume as short sellers scramble to cover. Second, monitor the available shares to borrow. While currently unknown for CLRO, if that number starts to shrink dramatically, it indicates increased pressure. Third, continue to observe that cost to borrow fee. If it remains elevated or even climbs higher, the pressure on shorts persists. Finally, any news or unexpected catalysts for CLRO, Inc., despite its limited current operations, could serve as a spark for the price action. Remember, CLRO's price has seen massive volatility recently, so expect continued swings. CLRO, Inc. CLRO presents a compelling case study for hard-to-borrow dynamics, with its incredibly high 708.5% cost to borrow and tiny estimated float of 0.7 million shares. While the recent price action has been dramatic and a high CTB certainly indicates significant short pressure, it's vital to remember that these are high-risk, high-reward situations. A short squeeze is never guaranteed, and short sellers may have strong convictions. Always do your own thorough due diligence. If you found this deep dive into CLRO's hard-to-borrow situation insightful, please hit that like button, subscribe for more unique stock analysis, and let us know in the comments which hard-to-borrow stock you'd like us to cover next. Until then, stay sharp and trade smart.